The reason I say it is the Achilles heel is because without gold, you'd still have all these technological advances I mentioned, but you wouldn't have a stable monetary system. But without silver, you would not have the high tech lifestyle that we all have. So silver bleeding over into the safe haven status with gold actually has more power than gold because without it, nothing else can really happen.
Welcome back to Metals and Miners. I'm its founder and its host, Gary Bohm. We have a fantastic discussion lined up today that I am really excited about. Today, we're fortunate to have with us David Morgan. David is a widely recognized analyst in the silver industry. He consults for hedge funds, high net worth investors, mining companies, depositories, and bullion dealers. He's the publisher of The Morgan Report, a world-class publication designed to build and secure wealth. He's the author of the Silver Manifesto and a featured speaker at investment conferences worldwide. David has appeared on CNBC, Fox Business, Yahoo Finance, MSNBC, Wall Street Journal, and many others. David, thank you so much for joining us today.
Gary, thanks for having me. That resume is accurate, but a little dated. I mean, it's been a while since I've been on TV, although I've been on Mid-Eastern TV with Bloomberg a few times recently in the last few months. But, and I don't want to dwell on my bio. I do want to just suggest that, there was a time when gold was probably the best performing asset from the year 2000 to 2011. 11 years it was in an up market. The last 12 or 13 years, it's not done a lot, although we're making new highs now. So, everything ebbs and flows, including the metals markets.
Yeah, I appreciate your humility there. So, David, you've written that silver is the Achilles heel to the entire financial system. Would you elaborate on that for us?
Yeah, it's a bold statement, but it's really true that really, if I had to pick one, it would be oil, because without energy, nothing happens. The adage that money makes the world go round is really a subset of energy makes the world go round. And for the most part, the dollar or the US dollar was the petrodollar until today. It's ironic we're doing the interview with that question, but it's a energy substitute in a way. And the idea is that silver is almost important to all aspects of our planetary life as oil, because the only element that has more patents on it is more useful than oil, which does, not only energy and transportation, but also the plastics industry and so many other derivatives. But silver is very similar. Without silver, we don't have flat screen TVs, computer monitors, cell phones, etc. So the idea is that it's a highly vulnerable situation from an industrial perspective, but it bleeds over into finances because there's a situation coming to the fore where those that own the gold make the rules, as the old adage, especially in the last vestiges of an inflationary environment on a global basis, where silver is actually more powerful than gold, in my view. The reason I say it is the Achilles heel is because without gold, you'd still have all these technological advances I mentioned, but you wouldn't have a stable monetary system. But without silver, you would not have the high tech lifestyle that we all have. So silver bleeding over into the safe haven status with gold actually has more power than gold because without it, nothing else can really happen. So I hope I'm being clear here, Gary, but the idea being that the power of silver is the fact that it's not owned by the central banks. The power of silver is that the individual can have it, or an individual hedge fund, or the Warren Buffetts of the world, or the Scott Maynards of the world, or small aspects. I had a hedge fund manager call me years ago, and he really got it. He goes, "You know what? This is so powerful because there's so little of it." Well, there's 7 times more of it in the ground right now than gold, but it's utilized at a lot higher factor. I mean, 60% of it annually comes out of the ground and goes straight into the industry. So I think I made my point. If not, reel me back, Gary. But the idea is that it's so important for every aspect of life, both monetarily as we near the end of the great inflation and technologically, that it's really got a 1-2 punch. Because of that, it really is a lot more, has much more vulnerability to what could happen in the financial system than just gold.
You know, it's an interesting perspective. I mean, it's true. Gold is mined out of the ground, produced, and then stored back in the ground
Right.
in a vault. Whereas silver is mined out of the ground, produced, and then utilized in so many different applications. So we're going to get into that a little bit more. But I want to talk about currencies for a moment. When it comes to currencies, there are some analysts that believe that there seems to be a new world order shift that's underway. They say that currencies all over the world are collapsing, even the majors, and that this is a very big deal. For instance, Japan just deployed $55 billion in defense of their yen, which at best may only slow its substantial depreciation. And the Japanese yen has depreciated or declined against the US dollar in 2024, 12 to 13% already. This is part of a longer term trend that has seen it lose about 33% of its value just since 2021. So, but they're not the only one. So the US dollar, it experienced a crisis in 2008, and the Fed printed trillions. And the Fed's going to likely print untold trillions to combat the next crisis whenever it arrives. David, can you speak into this collapsing currency issue concept for us?
Certainly. It's called the race to the bottom. All fiat fails. All fiat on the planet is fiat. So if they all fail, it's a question of who gets to the 0 point first. Is it the Japanese yen? Is it the Chinese yuan? Is it the renminbi? Is it the euro? Is it the Canadian dollar? What is it? And they're all falling. Some are falling faster than others, but they're all failing. And this is a problem, of course. So the dollar relative to the other currencies looks strong because they're failing faster. But if you look at the Fed's own data, the 1913 dollars were 2 cents. So 98% of its value has disappeared in 110 years or so. So now we're worrying about, how strong is it going to be here at the final stages? And no one knows exactly, but we know that there's implementation in place and has been for some time to have a new system. The IMF really has come up with, their new, I'll call it CBDC. It can be argued what you want to name it. But the SDR, the special drawing rights, was kind of a combination of a basket of currencies with gold, was sort of their last draw stabilization mechanism that has not been used in some time, but could be used in the future. Well, this has kind of gone away. What's really happened is you've had the BRICS break off. That has been a way to distance themselves from the dollars, the BRICS countries. And then you have the IMF, that's the bankers' bank that really runs the show, at least for the most part. They've come up with a system that is not dollar denominated or dollar with the lion's share of the power. And then you have, of course, the currencies that are on their merry way to end at zero. Now, none of these currencies will probably hit absolute zero. Some of the minor ones, you could argue, of course, the Zimbabwe currency and the Argentina currency and the Venezuela currency. And there's many more in my book, The Silver Manifesto, but the major currencies won't. They'll still have some perceived value, but it'll be diminishing at such a rate that people want to remove themselves from a tie to that. In other words, their savings will not be based in euros anymore or US dollars or Canadian dollars. They'll be based in precious metals, lumber, some commodity, coffee, a business, maybe in the stock market, but they'll try to remove themselves from the currency itself because the rate of change, the quickness of the amount of value that's being lost on a daily, weekly, monthly basis is so strong that they're motivated to do something other than stay in the currency.
Now, I'm sorry to interrupt, but you're specifically talking about the currency versus assets versus hard asset things, right? Yeah.
Absolutely, Gary. And yeah, they always interject if I'm not being clear or you want to add, please do. But that's my point. Yes, against any hard asset. There will be a time where most people that are awake will take any hard asset versus the currency. For example, you know, Jane and Joe that we refer to, not in a derogatory manner, but the people that really live paycheck to paycheck would rather buy more peanut butter than have another $50 in their checking account. That type of thing. It'll get to that point or push towards that point before the new system is probably implemented. The new system may be implemented before that. I really don't know. And the new system could be implemented and not really adhered to, where it's basically rejected. People don't want to have an all digital system. So there's a lot ahead of us that's unknown.
It's going to be interesting to see how aware people are going to be of this depreciating currency versus hard assets. I know they're going to be feeling it. I know they're going to be complaining of the inflation, but are they going to recognize what's actually happening? But David, in your June Morgan report review, you wrote, the gold and silver markets have experienced notable fluctuations this month, driven by a complex interplay of economic, geopolitical, and market specific factors. May saw significant activity in both metals, influenced by historical highs, anticipated monetary policies, and shifting investor sentiment. Can you dive into these complex interplays for us?
Well, the geopolitical system basically is an interplay between different ideologies. I mean, you can look at the CCP, the Chinese, and authoritarian top down, adhere to our rule or, leave. And then you have, democratic systems. You have Malay in Argentina that's gone from a socialist system of probably 100 years into purportedly an anarcho-capitalist, a more capitalistic libertarian bent. But I have my own opinion on which system works the best. In fact, it's pretty much factual if you're objective that capitalism has certainly flaws, and the crony capitalism we have now really doesn't represent true capitalism. But regardless, it has been, it's so far the best system that we have. But certainly, it's not perfect. But my point is, beyond all those systems, what's on top of them? And what's on top of them is the banking system. And this is something that really isn't pointed out very often. That, as Mayor Rothschild purportedly stated, give me the power to create money, and I care not who makes its laws. So the banking elite really don't care if it's communist, fascist, uh, democracy or whatever. Now, I say that a little bit in hesitation because really the way it's going, and they've tipped their hand if you read their papers and you attend their conferences, which I don't, but I've read their work, they do want basically the CCP as their model. They want in the new regime of banking, regardless of what country you're in, that you have the Chinese model, which means that you are restricted no matter if you're a billionaire, millionaire, or living paycheck to paycheck, restricted to what you can buy, when you can buy, and how much you can buy of whatever it is, goods or service. So it is based upon perhaps your carbon footprint, perhaps the calories you eat in a week, perhaps your transportation mode, and certainly based on your social media score, which is how much you align with the ideology of the authoritarians at the top. And it's not only the authoritarians of a given nation state, but of the banking elite themselves. So this is very, very scary times for anyone that's thought this through. In the old days, financial freedom meant freedom. If you have a lot of money, you could go to whatever country you wanted. You could buy whatever you wanted. You could start a foundation, and you could be a philanthropist and give money away, or start a school and help the poor, or you could hoard it all for yourselves and buy a big yacht and sail around the world. I mean, it was a freedom of choice that you had because you had an amount of money that allowed you to have that freedom. Those days are gone. You're in a position now where the bank, in fact, a side note, but it makes my point further, strengthens my point. I've gotten calls here in the last couple of months, people that wanted to buy precious metals, and their bank said no. We don't trust that XYZ bullion deal. Are you kidding me? This is my funds in your bank. And as I put it out in other interviews, actually, at truth and at law, that money that you believe to be yours in that bank is actually theirs, once you've turned it over to them. So it's a scary time. I'm not trying to play the fear card, but I am trying to enlighten people, wake them up, and give them the alternatives that maybe, just maybe, it's an idea of having a valued asset outside the system that no one can take from you, that has no liability on the other side.
So, a lot of that is very interesting, and there's a subsegment of the population that is definitely paying attention. It'll be interesting, I guess is maybe not even the best word, to see if they're able to fully implement that kind of structure through the CBDC in the United States. As you referenced, for China, I don't, that system can't be implemented through cash, obviously, but through the CBDC with the blockchain, it could very well be implemented, tracked, and imposed would probably be a good word on us. But inflation has been running hot for several years now. The economy is really not viewed as being overly stable, and the standard of living for so many seems to be in jeopardy today. The purchasing power of the dollar has been in sharp decline, as the Fed and other central banks around the world have been printing trillions over the last 2 decades. Why should we view silver as a stable store of value moving forward to protect our purchasing power and maybe even our standard of living?
Well, it certainly has not kept up with gold over the last 2 decades, which is a fact. I don't argue facts. I mean, if you look at the CAGR on gold since about 2000, it's somewhere around 10%. CAGR is the compounded annual growth rate. And there are very few stocks that have had that kind of a compounded annual growth rate. Gold has achieved that. Silver's somewhere around the 8% level. But as far as purchasing power goes, the face value of a US 90% silver quarter is on face 25 cents, but in fiat is roughly 10 times that amount, or 250. So 50 cents for a gallon of gas is kind of what I was paying when I started driving at age 16, 17. And so 50 cents in US 90% silver coins, 50 cents face value is about $5, which will still buy you a gallon of gas. So if you look at it from that perspective, it's pretty much held purchasing power. Certainly not done what I've expected it to do at this point in time, but it tends to overshoot at the end of these great inflations. Now, that's assuming we go into great inflation. I mean, there's a possibility that we go the other direction, like in the 30s, where there is a lot of money goes to money heaven. A lot of these loans are not paid back. The people that made the loans fail, which would be a lot of corporations that borrowed money from pension funds and high net worth individuals, and they can't be paid back. So people don't get the money back. And that's a failure. So there could be a contraction in the money supply. Kind of doubt it. It'll be both. I mean, there will be failures on paying back the debt that's owed. That's irrefutable. But is that the main trend or not remains to be determined. I doubt it, because most of the debt that's owed isn't corporate debt. It's United States government debt. And that can be printed away. And that's probably the most likely scenario. So the currency fails, and then you have to start over. And that's why the banking system is kind of on the edge right now, and they need to put a new one in place before the majority catches on that I'd rather buy that peanut butter than have $50 left over in my checking account. So they're working fast to push us toward the new system. And again, going back, and the point I want to make, Gary, you brought it to my mind, was, the great feedback you gave me. Look, in the US, you just don't say, we're not the CCP. This has to go through Congress. This has to be approved. I mean, the Fed, there's this, end the Fed, movement or meme, with the hashtag end the Fed. the Congress could end the Fed tomorrow if they wanted to. It was a creation of the Congress, and it could be decreated from the Congress. Not that it would ever take place, but that's the power they have. The point being is that for the CBDC to be implemented, if they do it at law by the book, which I'll presume they would, requires the Congress to approve a CBDC. The Fed just can't come in. Remember, it has a great deal of power, but it's really not part of the federal government. So I just want to make that point. People say, "Oh my God, the government's going to do this to us." Well, they may, but it has to be approved. So that's something to give you a little bit of, I guess, some peace of mind that it's just not something that can be slammed at us. It has to go through, or should go through, and is supposed to go through the powers that be, which is the Congress.
Yeah, and I appreciate you sharing that for the viewing audience. I would think that most of them are aware of that and have a similar perspective, but there's probably some who might think that it could just be unilaterally implemented. So appreciate that. And David, to stay on silver here, we've seen further increases in silver production costs in 2023 as inflationary pressures have continued. And we've even seen it into the first couple of quarters of 24. Taking all costs into account, many silver mines now need $20 to $25 per ounce of silver to be profitable. Total cost of silver production has increased by more than 50% since 2018. Also, more and more silver mines are struggling with falling grades, higher labor, and higher G&A costs. What impact will these higher production costs have on the price of silver and the mining equities? And because of their higher costs, do you foresee a significant round of buyouts and mergers and acquisitions coming?
Yeah, there's a little bit to unpack there, and it's good. I think I can get it all, Gary. First off, there's only about 25% of the silver mining industry, which is truly silver producers, meaning that their bottom lines are primarily from the element silver. 70% of silver mines are byproduct mines. So you've got roughly 75% of the industry that doesn't care at all what the price of silver is.
Yeah.
They just use silver as a credit toward their zinc mine or their lead mine or their copper mine or their gold mine. So they don't give a fig about what the price of silver is. Now you've got the other 25% of the industry that cares greatly what the price of silver is because it affects their bottom line. They're in the silver business. So the majority of the mined silver, 3/4 of it, round numbers, doesn't care what the price is. So that's a real sad thing when you think about it. And then when you look at what you've just outlined with the cost of labor, lower grades, everything you outlined, why would you even be in the silver business if you're breaking even? And for the most part, that's the case. And so what will it mean? Well, it will mean that there are people that own silver that's undervalued. First of all, the whole industry is undervalued. But you will have miners that have ready cash flow, maybe a gold company, and they'll buy out a silver mine or a silver producer because the value in the ground is so much more superior to what the book value or the enterprise value or the, let's say, market value is a better word, market value of the company at the time. So stock's true value at today's silver price would be X, and it's selling at 0.7X. So there's a 30% discount. Well, it's already there. It's in production. And I'm buying silver for 30% less than its true value. Why not merge with it? Why not take it over? Why not just buy it, put it on the books, and keep it in the ground? That's a pretty good warehousing facility. So I think you're right on that people that are really in the know and know how to analyze these companies are probably looking at it right now. And there are some out there that are extremely undervalued.
Okay, so it sounds like you are expecting a increase in buyouts and mergers and acquisitions coming, but I don't want to. I didn't want to put words in your mouth. So, David, China is the global manufacturing powerhouse. With their manufacturing prowess in everything from electric vehicles to solar panels to electronics and literally everything else, and we've touched on this a little bit earlier, what impact is China really having on the silver supply and the price, and how much influence do you expect them to have on silver as the years go by?
Right now, China is pretty much leading the silver charge for two reasons: industrial and investment. On the industrial side, there's so many solar panels that come through China. And, I'm going to digress a moment, Gary, but it reminds me when I was a young guy, I mean, 10, 11, 12, 13 years old. We, at that age, most of the stuff that came from Japan was kind of considered to be low quality. But it wasn't too long after we started getting these, transistor radios manufactured in Japan that only lasted a few months or whatever, to higher and higher quality, till we got to a point where the Japanese actually had the highest quality control of almost any nation state. I mean, it was Panasonic, Sony radios, you know Honda automobiles. I mean, they were known to be in. China's kind of been in the same boat as Japan. A lot of the stuff that comes from China is not very high quality. But on the solar side, they seem to be a pretty high quality. And I think they're gaining momentum across the board in, in QA quality assurance. But not only do they hold the lion's share of the PV industry, they, of late, meaning in the last few months, seem to have caught the silver wave. And this is because there seems to be a shift in Chinese investment demand for precious metals, where they really bought gold only into the
Yep.
silver market. And this is quite interesting because there's a arbitrage opportunity between the SGE, the Shanghai Gold Exchange, which is gold and silver, and what's done at the LBMA, the London Bullion Management Association, and the COMEX in New York. So there's a premium that's being paid for physical in the Shanghai Gold Exchange that doesn't exist in the other two places, which portends a possibility of silver moving from west to east. And I'll have to, move back into the old days, back when I was in Beijing for a week, meeting with the mining bureau and talking about silver and gold and their economy. I went to a few shops. I didn't have a lot of extra time to do personal stuff. This is sort of business slash personal. But I tried to buy silver in China. I try to buy silver almost any country I'm in, to see what's available, if there's anyone even selling it, if it's thought of as a good investment, all those type of things, with my own on the ground experience. The only thing I could see to buy silver as a quote unquote investment in 2008 was silver chopsticks. I mean, no one was selling silver coins or silver artifacts or any of that. Now you've got this exchange that's really pumping out a lot of demand for silver. So that's a huge change. Now, the last part of your question was how, what does it look like in the future, or how far is this going to go? And the answer is I don't know. But what I do think is that it'll continue. I think it's going to continue for a few more years because one feeds the other. The higher it costs to buy silver to put it into a solar panel, the more investment and demand there's going to have, which means there's less available for industry, which means there's going to be a higher cost to industry, which means the investors are going to see, oh my goodness, it's gone up again. So you're going to get this leapfrog, industrial demand, investment demand, industrial demand, investment demand. And all of a sudden you're sitting at $50 silver again. And you're wondering, well, geez, look at all this hoarding that the investment side has. There's only this much above ground, and I need that much for my next year's production. I better buy some more.
So you talked about this moving from west to east of this pricing power for silver. There's been a lot of chatter about that. Um, do you see this as a permanent shift taking place from west to east, and if so, what are the ramifications of that?
Well, the ramifications is you've taken it out of what I call the Anglo-American Empire. I mean, the real show hasn't been run just by the US dollar. It's really been a combination of the London and New York boys. You're kind of London elite with your Wall Streeters, combined. There's a couple books in the back here that talk about the Anglo-American Empire. Not too many people see it that way. That's how I see it. So you've removed really the monetary power as it's existed for well over 100 years into the Eastern hands. I mean, as we talked about earlier, how vulnerable, if silver is the Achilles heel to the whole financial system, and the East takes over the silver market as far as control of the physical silver, guess what? The West is now vulnerable to a new financial system, or maybe the financial system that's been implemented by China. But we have the silver, we make the rules. Again, the idea that he who owns gold makes the rules, that's in the current format. And maybe it's true. Certainly gold plays a role and has for, centuries, for, thousands of years, give or take, because, we're on a gold standard, and off one, on one, off one. But the point being that in the modern technological world, silver has an equal, if not greater, place. And I think the Chinese are now sensing that. Will they take it over longer term? I don't know, but that's the trend. And a trend in motion continues until it actually stops. So if the trend has begun, when does it end? The answer is I don't know. But what you're suggesting is it could continue, and I agree. Will it continue to the point of where, that silver Achilles heel is probably put over the IMF? I mean, with the People's Bank of China actually has more power than the IMF. I'm not saying it would, but I'm an open-minded and I'm a free market thinker, and I definitely have always thought outside the box, especially when it comes to monetary affairs. So I certainly wouldn't rule that out. Is it a high probability? No, it isn't, but it is a possibility.
It's interesting. So with the electrification movement picking up steam, combined with the fast-moving artificial intelligence movement, the solar panel build-out you've talked about, the monetary issues we're having, silver is clearly in increasing demand. And it seems like soon it could maybe likely be an unparalleled demand, something we haven't seen before. David, does the U.S. have a cogent strategy to ensure that they have enough silver to meet the demand at reasonable prices? I want to point everyone over to our Substack. It is free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and every single expert interview that we conduct, just like this one. And when you subscribe, we want to give you a free gift. It's a report that we wrote based on the important Ray Dalio foundational premise. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." This free gift is a must read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive this free gift on us. Also, I'm positive that you've enjoyed this conversation with David as much as I have. Please let him know. Hit the like and subscribe button and leave a comment below the video.